Well, this one was a bit of a surprise, although it did feel a bit last minute in terms of what we were expecting from him. We've had an increase from for the employees threshold from 9,880 up to 12,570. In real terms, that means the employees are going to pay a bit less national insurance. The figure that was given in the spring statement speech was £330 saving. We can't quite get there. It feels a lot closer to £270 because the saving only really kicks in from July, won't apply from April. So that's good for employees. There's no reversal of the health and welfare levy, so the 1.25% more widely is coming in. So it's a bit of give and take. Some employees will pay more, some at the lower end of earnings will pay less. For employers, though, there is no corresponding change to the employer's threshold, and instead we got an increase to the employment allowance. That's now increased from £4,000 to £5,000. But remember, although that will save employers' NI for some employers, it's only those employers who pay less than £100,000 in employers' national insurance anyway. So larger employers are going to have to foot the bill of the higher amount of employers' national insurance. Well, this was the final announcement. Often the biggest announcement in speeches is left until the end. We've got a cut in the basic rate of tax from 20% down to 19%. However, that won't happen immediately, or for that matter anytime very soon. That will apply from April 2024 onwards. It's an unusual thing to do because it is so very expensive to play around with the tax rates like that. So a 1% cut will cost £5 billion a year, but once it's introduced, it's very difficult to reverse. There'll be some knock-on effects to organisations you wouldn't expect. So charities will lose out, but not immediately. There's a 3-year period of grace from 2024 to 2027 where they'll still be able to recover the full basic rate of tax at 20% from the government, but from 2027 onwards they'll only recover 19%. So that equates to a chip in their donations, a reduction in the donations they receive of 1%. The overall saving per employee or per individual is on current thresholds about £377, so reasonably meaningful to individuals who are already struggling with their own cash flow. This is a welcome measure of sorts. What we had before was a quite complicated regime that applied for installers of solar panels and related technologies, where they could charge 5% VAT instead of 20% VAT. They had to meet all sorts of conditions, and the prevailing view was no one really understood the regime in the installation market, and they charged 5% on everything anyway. So this problem's been solved by reducing the 5% rate down to 0%, and a lot of the complex conditions have all been abolished, and that will happen from April coming. This is good news, as I say, of sorts, because really if you've got a household suffering in the cost of living crisis from paying an extra few £100s a month for their energy bills, are they really going to be able to afford the capital cost of installing solar panels even with this 5% discount? And what we've had in the past are subsidy systems where actually households who need it the most can have a subsidy towards installing these products. So really, alongside the VAT simplification and the VAT cut, a subsidy system is needed really to affect the households that need the help most. Well, for R&D, some good news and some slightly worrying news to come, perhaps. So we've had, as has been trailed for a long time, further categories of expenditure being capable of being included in an R&D claim. So cloud computing costs, data costs, and I think a new one today, pure mathematics costs. So that's good. That broadens the scope of the claims. We had about a year ago been told that R&D carried on overseas would no longer qualify for the relief in the UK. There's a small climb down on that if you're carrying on your R&D overseas because of regulatory or geographic regions. That could still qualify, but that's going to be pretty limited. One of the examples given is if you're doing deep ocean research, which you can't do in Kent or Sussex. That's a geographic reason for doing it overseas. So some relaxation there. The worrying point is the Chancellor once again has repeated the comments he made in the May speech recently, which was that he considers the R&D regime in the UK to be poor value for money for the Treasury. Because if you look at the amount the country is spending on R&D relief and the amount of R&D that's carried on, we're way below the OECD averages. Therefore, he's talked a number of times in recent weeks about refocusing the regime. Now, that really means it's going to be restricted in some way to target those businesses or those organisations that are doing the R&D that's got the greatest impact for the economy, that feels to me like it might become sector specific. So sectors that would have done what they were doing anyway, possibly the construction industry sector, may be excluded from having the relief going forward.